Okay, so welcome back to the channel and another educational content. Today's video we're going to talk about stop hands in the market. All right, we finished talking about liquidity, that is the buy stop liquidity, and also the sell stop liquidity. So we are going to talk about stop hands. All right, so you can see anytime there's liquidities in the market, there's stop hands and then price movement. Okay, so basically stop hands is the movement that is used to neutralize liquidities or stop losses. Okay, that is, it is when price move through a zone like it was trying to break the zone, but it's not trying to break the zone, but it's trying to take people out, and then price will just push to the direction that it is trying to go. Okay, so assuming there was a zone on the chart, price tried to go through the zone but it didn't go through the zone, start pushing to maybe the direction it wants to go. That is what we call a stop hunt. It is trying to hunt for the stop losses that people have placed there in the market. So I'm gonna go ahead and show you the areas where price is likely to stop hunt people and also move on to the direction the trade want to go and how to trade along them. Okay, if you are new here, subscribe to the channel, and also if you are advanced or you are already part of the channel, welcome and thank you for supporting. I'll put a Telegram link in the description. If you want to join, you can also join. All right, so we are on the H4 time frame, and I'm going to be using the UJ to show you guys. Okay, so you can see when there was price push from here to the downside, there was a push up. There was a push to the downside, there was a push up, push to the downside, there was a push up, push to the downside, push up, push to the downside, push up, push to the downside. Price pushed to this side and price came down here. You can see this long wick that we are having here is what we call a stop hunt. All right, price is trying to hunt for the stop losses around, take them out before it goes into their direction. Okay, because when you zoom in and see what this chart is looking right now, you can see there was a reaction around this place. There was a little reaction around this place, a little reaction around this place, and also a reaction around this place. Okay, so you can see this area here will be a key area for maybe a support or a resistance. Okay, so we have to draw that area there, support and resistance area, because of how many times price has reacted into that area. Okay, so let me draw that area there. Okay, you can see this was the zone. Let me go to the smaller time frame so that you can see it properly. So this is the zone. You can see price drop to the zone. There was a reaction here, pushed to the upside. Price came back to the zone, broke it, retested the zone, pushed to the downside. The price came back to the zone. There's a reaction, but it couldn't hold. Then it came back a little here. There was a push to the upside. Price came back to the zone. Okay, so this wick that you are seeing below here is what we call the stop hunt. Okay, price is trying to hunt for people's stop loss. So assuming you are trying to get in on this trade, you surely buy this trade here, put your stop loss somewhere below the zone, then maybe you target the immediate or the previous swing high. This was the previous swing high. Maybe this place is where your target will be. Okay, and this is actually where your stop losses will actually be. These are the areas where mostly people put their stop losses. Okay, so this wick that you are seeing here that I've circled it is what we call stop hunt. All right, price is coming to take people's stop losses out and then push to the direction that he wants to go. Okay, so this here is what we call stop hunt, right, in the market, and it happens most of the time. Okay, as we go, we move on, I will be showing you how to trade it. All I want you to do, just subscribe to the channel. All right, so I'll be showing you how to trade this and properly benefit from without being taken out of stop or anything. I'll show you how to use the this indicator ATR. I'll show you how to use the ATR indicator for you guys to be able to place your stop losses at the area where price can get to and the benefit from. But this is SMC, so I'll show you how to trade it using fair value gap and order block. Okay, So those are the areas where liquidity or stop hands actually is, right? So that is it. So let's also assume that there is a trend line around this place. Because price bounced from here, came to that same place, there was a bounce, okay? Came there was a bounce. So let's assume there was a trend line around that place. You can see on the trend line too, price pushed from here to the upside, price came back to the same zone, pushed to the upside, came back to this area, pushed to the upside, price came back to the area. You can see how here the price tap on perfectly before the push. You can see when price came there, it break the trend line, okay? So this is what we call trend line liquidity or trend line stop hands. Price was trying to hunt for people who have played their stop losses around this area, take them out before trying to go to the upside, okay? So most of the time these things happen in the market. You can see how price broke the trend line, took people out. So assuming people are in this trade, their stop losses will basically be somewhere around here. Someone would enter the trade around it. The stop loss will be here. You see, they have been taken out before price will actually go into their direction, okay? So that is what we call stop hands in a market, all right? So that is how to identify stop hands in a market. So let's go. All these things that you are seeing here are what we call stop hands, all right? You can see this was a previous high, price go to, there was a drop, price came back to the same place, there was a drop, okay? So this area here is actually a stop hand, all right? So this area here you are seeing is actually a stop hand. You can see price came back, you can see price came there, took the high. This was the zone price go to, there was a drop, price came back to the same zone, wick around the zone, and then push to the downside, okay? So zones that price get to and there was a push through the zone, or maybe a push inside the zone before price reverses, is what we call stop hands. Price is trying to hunt for people's stop loss before it go, okay? You can see the same thing happening here. Price get to a low here, there was a push to the upside, there was a push down, okay? So people will actually put their zones below here as their support zone, so that anytime there's a break and retest, they'll be looking ahead to enter for a buy trade, okay? Because price got there was a push. People were expecting for price to break, retest, and then they sell for, right, as an intraday trading. And you can see when price there was a wick through inside the zone, okay? So this wick inside the zone is what we call stop hands, okay? Okay, so this wick through inside the zone is what we call stop hands, okay? So that is how to identify stop hands in a market. Most of the time, the wick that goes through the zone or on the trend line is what we call stop hands. Okay, so we are on the NZD USD pair, and I'm going to show you a stop hand in a market, all right? You can see when price came back to this zone, there was a push to the upside. Price came back to that same zone, there was a push to the upside, there was a push to the downside. Price came there was a drop, okay? So this area here will surely be a key area, key zone, okay? Let me put it there as our key area. It's our key zone. Okay, so this area here is our key zone. So when price came there, there was a push. Price came there was a little push, there was a break, retest, drop, retest, and drop. And you can see when price got onto the zone, you see how price was crossing over the zone. All right, so let me put this one here. If you assume price tap on the zone perfectly here, also here, you can see when price got here, how price was able to wick through the zone before the massive drop happened. You see the same thing is happening here. Price is trying to wick through the zone before the drop will happen. So this is what we call stop hands in a market. And after you've identified your stop hands, area of stop hands, the next thing that you have to identify is, has there been a change of character, or has there been any market structure shift? Okay, so we've talked about break of structure, change of character, liquidity, and also stop hand. So the next thing we are going to talk about is our order block and also our market structure shift. Then we put them together, then we find our strategy that we are looking for. Okay, so we already talk about change of character, break of structure, liquidity, which is the buy stop liquidity and the sell stop liquidity. All right, and now we're talking about the stop hands. The next thing we're going to talk about is the order block and then the market structure shift. Okay, then we put them together, then we find the strategy we're looking out for. Okay, so that is it on this one. I'm trying to make the video very short. Don't intend to make the video long. Okay, so I'll see you in the next video.